Hi everybody, Boris, BK Forex. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar for July 2nd to July 6th, 2018. And the story in the calm dollar land is really all over the place this week. Everybody went their own different direction, and it looks like it's going to be a very, very interesting development next week as well, because we have RBA on the docket, and we have Canadian data end of the week, and those stories are going to be very idiosyncratic to those currencies, I think. But the front of the story this week actually was the Kiwi. The Kiwi got battered and took out long-time lows. The critical question here is this a start of a fresh downtrend, or it's just simply probing the lower end of the range? And my argument, I think, for now, is it's still probing the lower end of the range. To me, the Kiwi is a sort of a distressed buy right now rather than a continuation sell. So we'll take a look at the charts in a minute, but let's take a look at the levels. The levels in the Aussie remained relatively the same, but we tested the lower end of it, as we said last week, at 73s, came back up now to midpoint around 74s, and we still very much remain the 73-75 trade in Aussie dollar. Dollar CAD technically is the single most interesting trade here because this 34 level has proven to be a double top. And to me, that's a very, very strong signal that we have at least a modicum of downward pressure here in dollar CAD as we flip around. There was a big sentiment change here this week that flipped the trade from 34s back down, and I think that sentiment change is going to continue. And of course, Kiwi broke the 68s, broke even the 67.50s, kind of tripping stops all along the way, and finally consolidated today a little bit at the close of the day. All of it on essentially what I thought was not really a dovish RBNZ, but I guess the market read it as an RBNZ that's going to stay very much neutral and may even entertain the prospect of a rate cut sometime down the road. Both the Kiwi and the Aussie also huge victims of the trade war, or sort of casualties, I should say, drive-by casualties of the trade war skirmishes that have been going on. And it's going to be interesting to see, because if that worry diminishes, if we stop getting rhetoric from China, if we stop getting rhetoric from the US next week, and the market begins to focus more on just the global growth economic flows, that naturally provides a little bit of a positive sentiment for both of the pairs. So the calendar next week, relatively muted for the calm dollars, but we do have two very key events. We have the RBA cash on Tuesday, where the market is essentially expecting to do nothing. It's expecting the RBA to stay 150 and maintain its neutral direction. I mean, I think the only thing that the market would interpret very, very dovishly is if the RBA said that the risk of a cut is as strong as a risk of a hike, rather than a sort of a more neutral tone. If they were to emphasize even if they were to bring in the idea of a rate cut, that probably could weigh on the Aussie. But the Aussie then after that is also going to get a boost from economic data. I'm just looking for where's the Australian economic data? It should be on here. We have retail. Here it is. Retail sales and trade balance. Both of those will be interesting because the retail sales and the trade balance, of course, especially retail sales, very, very important as far as the strength of the consumer. And if the strength of the consumer is generally improving, I think that provides a little bit more of an oomph to the Aussie. And Aussie right now is playing a defensive game. The game is basically no rate cut. If the market feels modestly certain about that, it should provide a little bit of a boost for the Aussie. But then the end of the week becomes very, very serious, important data, which is the Canadian employment data. That data is really important in the context of the fact that we're going to have the BOC rate announcement the week after that. Polos last week was surprisingly hawkish, dismissing any of the short-term blips in the data and basically saying that it's time to hike rates. The only thing that was really frustrating him was all of the trade war skirmishes that we have across the border that were depressing business sentiment, and he was cautious about raising rates against that. But fundamentally, remove the political aspect and the background of the story, he's more than ready to raise rates, which is ultimately bullish loony. And if we get positive economic data out of Canada, that should provide us further impetus towards that 130 level. Let's take a look at the charts here and see how everything sets up in the calm dollar land here. So on the Aussie side, very, very clear definitive support here at the 73s. Right now, this is a lower low, no doubt, but it's been a low that's held effectively for about 2 weeks. Today's price action is relatively good. Of course, I think the thing that will break the hearts of all longs is if we just come back and drift and take out the 73s, then it really creates a much more negative structure technically. But as long as we hold the 73s and just kind of consolidate, drift sideways, there's I think a reasonable chance here for a mild upward drift where we could trade back up towards the 74.50s, with 75 still acting very much as the top of this particular consolidated range. So we're consolidating at lower prices with a modest upward bias front of the week. Now, Kiwi, where's my Kiwi here, is just really the most battered of all the COM dollar pairs. Desperately trying to eke out some sort of a bottoming signal here. Now, let me just pull you back here. So you can make the argument, which you can easily see technically, that yes, we broke fresh lows, but the break has not been significant. And I think, typically one of the interesting things about Kiwi, and let me go even further, you can see that this is not a insignificant range. And by range, I mean a broad general price point at which there was certain agreement that this was definitely a value proposition. I think this only becomes a non-value proposition if the market begins to seriously speculate on the prospect of lower cuts, a cut from the RBNZ. So at least for the very near term, I think there's just a modest possibility of us trading back to 68.50, maybe 69. 69 now becomes that whole resistance point, which was former support. And watching, of course, the 67 level is the key support level here. But for now, again, same kind of a signature. We did make fresh lows today, but ended up relatively to the highs of the day. So Monday will be another key tell. So long as Monday can hold the lows from Friday, that would give you more confidence that there is a tiny chance of an upward drift in the Kiwi that gives a chance maybe to trade back up to 68.50, 69 as the week progresses. And then finally, and this is the really interesting trade, look at the caddy. Dollar CAD really making a massively serious turn here. And what I like about this technically, fundamentally, and from every other angle, is that when you have these big candle turns, today was a big candle turn at extreme points, this is not just a move back, right back up. This tends to signal to you that there's more continuation, and the natural continuation is all the way to the 130 level. Caddy is getting supported by very high oil prices and by speculation that maybe the employment data will be pretty good, and most importantly by the fact that BOC is going to step up to the plate and despite all the problems, come in there and hike rates. So all of this presents now longer term. Dollar CAD still looks to be very much in an upward trend, and it's just simply pulling back in an upward trend. But the pullback here, I think, still has scope to go all the way to the 130 level. So to me, this is a very interesting trade here. You do have a lot of risk here because it's essentially close to 300 points against the top. But it would have to have just some. It would really have to. I think the thing that would just completely unwind this trade is if somehow Polos came before the market this week and said, no, we're not going to raise rates at all, definitively. If he completely changed the market expectation about rate hikes, nothing else will matter, and this thing could turn right back around. But that's a very unlikely event to happen. So therefore, if we're operating on the assumption that there's a strong and decent chance that the BOC hikes rates, we're probably going to trade to 130 into the hike. This is the key thing. I think 90% of the move is going to happen before the actual release, and then by the time we have a release, we could have actually even a rally on a warning that this is going to be the one and done type of a deal. So generally, I like these big power moves on candles because they tend to signify there's further continuation in the move. You can see it on the upside here. We had two big power moves, and that was good for another 100 points to the upside. I think at minimum, we're still good for another 100 points to the downside here. Possibly some retrace back. If you want to capitate your risk at a more reasonable level, probably around 133 would be the good capitation level. Because I think we get up to 133, it already looks much more dicey, and it destroys the whole turn in the CAD structure. But for now, there is clearly a turn in the CAD structure, and there's very likely possibility for us to go to 130 before the week's end. Wish you guys the best luck, the best trading. Boris Schlossberg, over and out.